Hey guys, how's it going? It's Andy from Magoo Investing. Happy Friday. I'm recording this pretty early again, so I'm going to be pretty quiet, so I'm going to keep the microphone as close to the mouth as I can. But since it is Friday, I thought it'd be a good time to talk about just some stock market news. I've been wanting to do this for a while, and I thought this would be a pretty good opportunity to do so because the stock market is closed today because of Good Friday. It was something that I kind of forgot about. I was looking at some option chains, and I was like, why are they for Thursday? That's strange. But I think it's always good to kind of look back to see what's happened in the past week for the stock market, because it always feels really bad when you're kind of planning to do something in the overall market and you forgot about some major market event that happened last week that maybe put some volatility into the market or kind of answered some questions about what's happened in the past week. So in this video, I'm going to be talking about some of the major market stories that moved the stock market in the past week. We're going to be talking about some individual stocks that had some news and some earning reports. And then I'm going to talk about what I'm watching going forward, because every week there's always something that's going on in the stock market. You have jobs reports. Maybe you have Biden's going to come out and say something. Maybe you have Jerome Powell's going to come out and say something. So I think it's always important to kind of have a general understanding of what's going on. And I'm sure I'm going to be missing some important stories. So if there's some story that I missed that you thought was very important for the past week or something you're watching going forward, be sure to let me know in the comment section down below. Also, I'd really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. I can try to be as consistent as possible as I can in the month of April, and seeing your guys' support would make that a lot easier for me to do so. 100% the biggest news story of the past week was the fire sale and margin call that happened towards the end of the day on Friday, and then we saw the results of it going into Monday. And this was from a pretty unknown hedge fund. If you look up hedge fund, a lot of the targets from the media that you've been seeing in the past couple of months has had to do with the GameStop situation, where it was Melvin Capital and Citron. But this was a different hedge fund that had some problems, and it was very interesting because it kind of came out of left field, and it's going to be very interesting to see if it results in any more government scrutiny about hedge funds, because yes, the GameStop fiasco had a lot of government representatives saying a lot of things on Twitter, but saying things on Twitter and making things actually happen are two completely different things. But basically what happened is that this hedge fund was trading on margin, and the idea of margin is you are borrowing money from your broker, or in this case, since you're borrowing a lot of money, it's going through a bank, and you're borrowing the money to try to leverage up your position. And the idea is that if you're right about a position, you're going to be making a lot more money, because say I have $1,000 to invest in right now. That can be great. I can make 20% if things go really well. But what if I increase my leverage and now I'm investing with $5,000? Well, the way that the banks allow you to do that is by you're going to be paying fees and having collateral. And the idea is that the banks want to make sure that you're good to pay the money that you're borrowing. And the problems happen when a stock goes the opposite way that you're trading. And margin is something that pretty much any investor can use. You can use it even on Robinhood with Robinhood Gold. But I've never felt so strongly about a position that I would leverage my positions, because if things go wrong, you're in a really tough spot if you're not in a pretty good financial situation. So basically what happened is this company, this hedge fund, was over leveraging their portfolio, and it got to the point where the banks were like, okay, we need some more money as collateral because things are not going that well right now. And they got to the point where they weren't able to pay it back. And what's one way that you can raise a lot of cash? You can sell a lot of shares. And for someone like me and you, say I go into a margin call and I need to pay back, like $1,000, I can probably do so by selling a lot of my positions. And selling 100 shares of GE at market price isn't really going to do anything. The difference comes when you're holding full percentages of a company. I remember reading a book. It's actually underneath my tripod. I use a bunch of different books to hold up the camera. One of them is The Confessions of a Street Addict, talking about how he was running his hedge fund back in the early 2000s. And he got to the point where he needed to raise money to pay out one of his clients that wanted to take their money out. And the problem was he was so involved with some of these smaller banks that if he sold any of his shares, he owned 8% of some of these banks. If he sold, it would have crashed the stock. And that's pretty much what happened. And to raise a lot of capital, they had to sell shares, just full blocks of companies, usually below market price, to make sure that they could get the order executed quickly. And you had companies like Viacom and Discovery that fell 50% and 45% in the past week. And so these are some pretty significant moves, especially because these are companies that have done incredibly well in the past couple months. Then you have some Chinese companies like Baidu, Tencent, and VIP Shop that were also down significantly in the past week. The idea and kind of the general consensus is these were holdings by this hedge fund that had to be sold to pay back the margin call. And so this led to a lot of worry at the beginning of the week and some discussion about banks are going to be losing a significant amount of money. And so it's going to be really interesting to see what happens going forward, because this is not something where, the story ends the second that it comes out. We're going to see if there's going to be some trickle-down effects to see if there's any regulatory actions against, how these hedge funds are over leveraging. We've had some problems with naked shorts in the past with the GameStop situation. Now we have this fire sale and margin call that resulted in some major market volatility. And when people start losing money and the banks start losing money, that's when you're going to start to see some pressure by the politicians to try to limit some of the ability that they have to manipulate the market. So that's something we're going to have to watch going forward. But overall, the market still had a really solid March, even though we did see some volatility at the beginning and the end of the month. But when you look at the overall market, the Dow was up 6.6%, S&P was up 4.3%, and the NASDAQ was just barely green, being plus 0.4%. And that results in a very solid month, and the S&P actually closed above 4,000 for the first time in a while. If you've been involved with the stock market, you'll know that these kind of full numbers are very important for the overall stock market. I think we hit Dow 30K this month. Maybe I was wrong. Maybe it's a different number, but it's kind of it feels good mentally when you see one of these indices reach a certain milestone. And the S&P hitting 4,000 was pretty important at the beginning of this week. And it's very interesting because for the past couple of weeks, I've been talking about how I think that people are going to be rotating out of technology back into recovery plays because we have some worries about the variants of the virus and the vaccine rollout just happening in general. And we've been seeing that in action with Dow Jones being up 6.6%. And in the past, year, the NASDAQ has been outperforming pretty much the entire market for the majority of those months. So it's been interesting to see where money has been moving to and from. But one of the big catalysts that happened last week is that the Biden administration came out with their infrastructure plan in the middle of last week. And this was a plan where they're going to be spending $2 trillion on projects. And it's seen as a very good thing by the market. Anytime you can stimulate the economy, we've been seeing that with the stimulus packages. And now we have this infrastructure package where anytime you're going to be injecting money into the economy, people get really excited about that. And so I'm going to read some of the areas that the money is going to be going. They're going to be putting $621 billion into bridges, roads, public transit, ports, airports, and EV development, and we'll come back to the EV part in a second. $400 billion to care for the elderly and disabled Americans. Inject $300 billion into improving drinking water infrastructure. I believe this is going to be removing lead pipes, which is seen as being a very good thing for the environment and just good thing for health overall. They're going to put $300 billion into building and retrofitting affordable housing, along with constructing and upgrading schools. And then they're going to invest $580 billion into American manufacturing, research, development, and job training efforts. So this seems as a very positive thing. Kind of put some of the worries that we've been seeing about the Federal Reserve, the raising of these short-term interest rates. So this has kind of put the market in a more calm spot than they've been in the past couple weeks. So it will be very interesting to see what happens there. But let's talk about some of the news stories that we saw in the past week, because it's not just the hedge fund. It's not just the Biden infrastructure plan. We did see a lot of very interesting numbers coming out from the delivery numbers, coming from a lot of the EV companies. And surprisingly, the EV company that kind of boosted up the rest of the stocks was Ford, which is very interesting because I made a video back in, it was either late January or early February, talking about why I thought Ford could be a really interesting EV play, just because it has been so undervalued, and it seems very possible that based off of their illustrious history, that they'd be able to bounce back. And so some of the numbers that they saw is that they saw a 74% increase in their EV sales with their Mustang Mach-E and then the Ford F-150 hybrid. So there's some very exciting numbers coming out, and it kind of gave a boost to the overall space because Tesla and NIO have been selling off, I wouldn't say aggressively, but they've definitely been seeing a lot of selling pressure recently. And now we've been seeing some of the numbers coming out for their March deliveries. NIO broke a record for their sales numbers despite having the chip shortage that has faced a lot of the overall industries. It's not just the chip companies, not just the tech companies. Pretty much every company that I've seen has mentioned something about the chip shortage being a problem going forward. So they had 20,000 deliveries overall in the month of March, but they did have to trim their guidance going forward because of that chip shortage. And then Tesla this morning announced that they had 180,000 vehicles produced and 185,000 vehicles delivered in the first quarter of 2021. But since the market's closed today, we're going to have to wait until Monday to see how the market kind of reacts to that type of news. Then we also had news at the beginning of this week talking about PayPal, where they came out and said they're going to be allowing cryptocurrency to be used as payment on the platform. This is very exciting for not only PayPal, but just crypto in general. We've been seeing a lot of excitement about PayPal and Square users being able to buy and sell cryptocurrency on the platform through an intermediary. But the fact that PayPal is now allowing customers to pay for products using crypto. And it's not only good just for cryptocurrency, it's good for PayPal overall because it's going to bring a lot more people to the platform most likely, and it's going to increase their trading volume overall would be my guess. And so that was some exciting news. Let's talk about some of the earnings reports that came out this past week. We didn't have a lot of them, but some of the ones that were announced were pretty interesting. We had Lululemon stock, which announced solid earnings with better than expected forecasts for this quarter and this upcoming year. And the stock fell because of it, but for the numbers I saw, I was pretty impressed with the numbers. In the last quarter, they saw online sales jump 92%, and the company announced that it generated $170 million in revenue in 2020 from their Mirror project, which is one of the main reasons why I was excited about the company going forward. And so that's going to be interesting to see what happens because Lululemon is in an interesting spot, kind of similar to Peloton, where they had an incredible 2020 at the end, and now they're investing in this fitness startup, which gives them a lot of growth potential going forward. But it's going to be very interesting to see if that actually plays out kind of how I expect it to, because we've been seeing a lot of selling off with Peloton as they were kind of seen as maybe a fad for 2020. I disagree. I'm a shareholder now. But Lululemon had earnings this past week. Then we had Chewy, ticker symbol CHWY, which came out with impressive numbers that included a surprise adjusted profit and revenue that's up 51% year over year. And that pushed the stock up around 10% from the news. Very impressive numbers. I talked about them at the end of last year, and I was very excited to see them start to implement telehealth for the pet industry because from the numbers I could find, it was like 70 or 75% of their revenue comes from consumables. And so that's just not my favorite way to see it. And if you can bring recurring revenue in from telehealth, I think that's a genius thing. And I believe that it becomes a part of their like subscription model. If you subscribe for, I think it's like recurring deliveries for whatever products you're buying for your pets, you get the telehealth included. So it'll be very interesting to see if that is a way to kind of remove some of the reliance on the consumable products for the pet industry and give them some more reliable revenue income. So that's going to be interesting. And then the last stock I wanted to mention is Riot Blockchain, ticker symbol RIOT, which announced some really solid earnings at the start of this past week. Their hashing capacity for Bitcoin increased by 460% year over year. Revenue was up 116% compared to the previous quarter, and they mined a total of 303 Bitcoin compared to 222 Bitcoin in quarter three. And their total mining revenue was up 78% year over year to $12 million. And this has Riot up around 200% this year and up almost 6,800% in the past year. So I talked about Riot as an interesting way to invest in cryptocurrency without just buying directly into crypto. I talked about some options like PayPal and Square, which give you a little bit of exposure, but not as much. And then you have something like a Riot blockchain that's going to be very dependent on the success of cryptocurrency going forward. And I still think that's a very interesting play to consider. So for the earnings that we have next week, the only ones that really jumped out to me is we have Carnival Cruise, ticker symbol CCL, which will be before the market open on Wednesday. And then besides that, we're just kind of waiting for the next quarter of earnings. All of the major companies have really released the earnings that we care about. And it'll be very interesting to see when the next wave of the tech stocks release their earnings, because that's when you get a lot of the market volatility. And that's when you get some interesting things to talk about on this channel. So let me know what stories I missed this past week. And let me know if you want me to continue doing this series, because I always like talking about the stock market. So hopefully you guys have a fantastic weekend, and I will see you in the next video.